Day. The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. We have the Dow Industrials down 430, NASDAQ off 46, S&P's down 31, gold contract down $24, trading at $17.13 an ounce. We have silver down 23 cents, $17.25 an ounce. Light sweet crude off $1.27, $34.99 a barrel. Notes and bonds. We get the 10-year right now up 5 ticks, trading 138.29. The 30-year up 22 at 177.28. And King Dollar down 359 ticks, 96.956. The euro is at 112. The yen is at 107.36, and the British pound is at 125 to 1 U.S. dollar. Tom O'Brien, what's going on?
There's a lot going on, man. There's a lot of red on that board. But how about the NQs within like 20 points of being positive, man? You got the S&Ps like 70 points off the lows at 10 in the morning on Monday. So how about the VIX? VIX under 40, gold with action, oil with action. Gotta love it.
That's right. And what you have out here, folks, we had the S&Ps almost down 100 points last night, so you're down 32. So the bulls have the shot right here. Now, this is where this is laying out. If we, in fact, just as Tom's bringing this up, NQU, I believe I'm still on. Let me see. We swapped it over.
Might be M is on that front.
The rollovers just happened. NQ. Okay. Let me see this for a second. So 167. Yeah, NQ, yeah, the roll's happening. So NQU. So what you have here, folks, okay, is this. And when you talk about from lows to highs, it's quite a dramatic move, no doubt. Low last night was 93.68. Well, we're at 96.09. And the NQs, of course, have been the strongest indice out there. Bottom line, we'll see whether it can basically get positive, which it looks like it's going to basically fill the gap. So the gap from Friday on the NQs would be 96.31, and we're at 96.12 right now. That being said, guess what? That good old S&P, they're going to have to do some work on this S&P simultaneously, which they're working on. There's no doubt. We're only down 29 points, and the gap fill, and that one is 3,036, and right now you're at 3,004. So huge amount of pieces in this marketplace, and as you're kicking off on Monday, and what we do have out this week, folks, is that you got quad witching on Friday in the option market. So you can expect the volatility is going to be out here, and we'll see whether the bulls can get this into a positive area, man.
It's interesting that we're kind of close to where we were towards the end of the day on Thursday in almost all the indices. Friday was sneaky. I mean, I caught a news report, some, NBC, ABC, something, the markets are positive Friday, right? And they were positive Friday. And that doesn't encompass that. I mean, the NASDAQ, my goodness, it's because you were up so much early in the day, and then you had the run from 2 o'clock till 4 o'clock in the day.
Yes.
But the markets fell apart basically the whole trading day up until 2:45. And so what's interesting is we're right back to Thursday's close, which was the epic failure day. And man, the NASDAQ, you go from Friday morning, we're at 98.35, and by the middle of the afternoon, you were below 9,500, so 350 plus points, and somehow you get a positive print on Friday. Maybe not the positive print. I don't know. Just interesting stuff to keep in. This is an important area right now. We're right back at the end of Thursday. Friday seemed positive, but it was a mess throughout the day, and now today we have a mess overnight. We trade higher, but we're higher. But we're back to Thursdays, so all we're doing is we're back to the 5 to 7% loss. The final is, the final numbers after that.
And we happen to be on right at the perfect time right now, folks. On a Monday morning, you get 10:10. Market's trying to make it back. I suspect, the market has about an hour and a half to make it back. Because the bottom line is that when you're fighting like this, it's either going to make it or break it. And if it breaks it, if it stays like this for like an hour, it'll sell off. Because what should happen, because of the acceleration has been so dramatic, the bulls should be able to overtake this right now. And we'll find out. That's where this is.
It's close, right? I mean, we got
if I was a bull, I'd say that, we're winning right now. Do you know what I'm saying? Really? Oh. Because guess what? You're down 100 points. You're only down 26 points, right?
Yeah. I mean, 75 points off the lows, and we're 41 minutes into the trading week.
Exactly. Gold. Let's go take a look at that gold contract. Gold out here, folks, trading down to a price point of 1706 today. You're at 1715. And, bottom line is that it's going to need a lot more volume to break down. The lower end of the consolidation that we've been in since April 7th is about 1671, 1668. So we've already hit this low of 1706. If that's all they can do to the gold market, when in fact, we have the broad markets that, have been down, are down, all of the above, gold's going to pop its head back up again. So let's talk COVID, Tom, okay?
Yeah, we should talk about it at some point, man. The market was down almost 4%, 3 to 4% last night, basically about it completely. That's my take, man.
And what you have, folks, is this. It's going to get really intriguing. Now, the reason that I'm bringing this up is that, number one, Tom and I were in Florida. The cases are going up in Florida. Now, in St. Pete, right where I'm sitting right now, folks, okay, this is sad what happened, actually. So we're in the west coast of Florida, folks, okay? The east coast of Florida got hit very hard, and it's hard to speculate what it is, but there's many more New Yorkers on the east coast that go back and forth almost every couple of days, okay?
Sure. There's bigger ports over there, too, maybe? Miami,
yes,
travel.
Right. So that is why maybe they got hit a lot harder. What has happened, however, over the weekend is that St. Pete has got hit, and got hit very quickly. And the aspect of the picture, we're in the third block, and it's just like if you're used to a city that we go 1, 2, 3.
It's a grid.
Streets. Yeah, it's a grid. Streets and avenues. Bottom line is that they had 3 bars in particular. They only opened Friday, and they had to close down on Saturday. It was that dramatic.
One of them had, I think, a few people who were staffers test positive. Another one had one staffer test positive.
Yeah. The problem is that it's very quick for 20. These are between 22 blocks. But I suspect by the time tonight comes, it's going to go a little bit further.
Yeah.
So
be careful there, man. What I found so interesting, right, is that myself, along with, you do the occasional program at home yourself. We're fortunate in the industry that we're in. A lot of our hosts, they work remotely. They're able to do it from home in a fully interactive atmosphere, Skype, technology, all that stuff. Myself, I was able to do it. And the first time that I was really back in the office was last week, Monday and Wednesday. The point being, right, and I'm still hyper aware, and yet that is me branching out, right? 2 to 3 months. So everybody's branching out more as you have these numbers climbing in areas that are a city. We can talk about it a little bit more. We'll pull up the numbers, but it's not a coincidence that I'm going out more, you're going out more, and I'm just going to, remain. You got to remain super vigilant, man.
No more bars this week. That's it.
You got to remain super vigilant. It's going to keep going.
Sad,
you got to.
but true.
Yeah.
Dow down 416, Nasdaq up 40, S&P's up 29. Stay right there, Tommy, and I come right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's off 401, Nasdaq's off 43 rather. S&Ps are down 29, and we're kicking off this week, folks. You get, quad witching happen. Other than that, there's not going to be a lot of news events that are coming down the pike here. So
yeah, I mean, especially when compared to what we're used to, right? We just had deep into earnings season, and then you go from that. We had non-farm payrolls,
right.
And then you have Chairman Powell out there as well. So big numbers to compete with, for sure. But the volatility is just amazing, man. I mean, I think was this the let me get the volatility. Yeah, check out this volatility just before we get back into COVID. I mean, coming into that non-farm payrolls number June 5th, right? The market shoot up 3.2. We extend the game Monday. I mean, just crazy percentage-wise, the continuation that we're getting. You get the VIX at around 40 on those numbers. But jumping back to COVID, so the raw numbers you're dealing with, I pull this up every day, man, especially because as we started seeing the spike, you can't help but living in the state, seeing the 7-day average spiking. Now, early on, I had said, man, you go back to April 25th, okay, numbers have been rising in Florida since April 25th. If you start the trend, which is remarkable considering it's June 15th, and if you think that things might accelerate on that type of, that it could be building for that long, huge numbers, man. 2,581 in one day alone, June 13th. The number coming in June 14th, still over 2,000. I mean, you're looking at over the last 4 days, more than 8,000 cases in Florida. And, so I had the headline up here.
Particularly because, what happens here, folks, okay, you can't discard it when you're a technical trader when you're looking at charts, man. I mean, it's like, okay, I don't.
And that's why, the only reason this.
I look at this, it's like, okay, man, they're going up.
Yeah, that is a steep curve, man. It's almost steeper than the beginning of the curve. We're now far over where we were the peak in April.
Yeah.
And, so this is the times. The numbers vary a little bit. Florida Department of Health. Now, this has been controversial. The woman in charge of this, right? She quit, saying that she was being forced to manipulate the data. She started her own site. So, I don't know if it's probably not bad data. I'm just not sure it's being used to represent the full real spectrum of what's going on. But nonetheless, you go into, talk about negative testing, okay? the problem with these, and people bring them up, is that they only put one weekly dot of data for the positive percentage, and the last one we have is for June 7th. It's June 15th, and you see the recent rise, right? The last one for positive tests date back to May 3rd.
Tom, come on. That's crazy, because if we looked at the market June 7th and today, it's the same.
Yeah, exactly. Right. Yeah. And if you look at the numbers for June 7th, okay, we're at 1,000 cases. Just so in Florida, you know, we're at 966. We're around this realm. Things have really accelerated in the last week, and so you just have to be aware, man, because even just like you say, right, businesses are still open in St. Pete, but you see the headlines. I sent this article to you because I sent it to Bestford as well, just to make sure that you guys are out in that area.
We know, folks, okay? I mean, the bottom line is this is really unfortunate, because all these places right next to us going out 30 blocks are definitely going to have less business this week. I mean, unless you're out of your mind. I mean, it's right. The jump was just too fast and too quick in 24 hours.
And I would say the fact that you have multiple places with multiple staff.
That's my point.
This is not one person that happened to visit a spot and everyone's getting tested. You have staff at multiple venues. That means there's pervasive community spread going on,
and
man.
all the bar people hang out at the same places. That's the
it's a very vibrant downtown.
If you've ever been in the bar business, folks, okay, everyone goes out to the same places. You know what I mean? It's
especially when they're that close. They're side by side in a few streets and a few, more than that. But right, it's an area, not a one establishment.
So if you're wondering why you might be getting a little sell-off,
and that brings it back,
folks. It makes a difference.
And I was just going to add to it, so that brings it back to the market, right? Places are still open in St. Pete, so you're going to hear everything's back open, but there's got to be an impact, man, when you see spikes like this in communities. And it's going to continue, unfortunately, until somehow we get a vaccine or we get a treatment.
Yeah. So we're going to go from there to Hertz, folks. It's not going to stop the Robinhood crowd from and Trader Dave buying Hertz. So Hertz got the go-ahead from the judge in order to basically push out 500 million shares, folks.
Look at that. Look at that. That's a great headline. Read that headline.
Yeah. Hertz warned stock buyers will need a miracle in order to avoid a wipeout, folks, okay?
I'll take 10,000 shares, please. No.
This is so bizarre. It's unbelievable. The bottom line, folks, is that, and they're selling these in the open market. Now, I gotta. When you sell in the open market, folks, what it means is this: is that the company itself, okay, issues the shares out of the treasury. They made a deal with Jefferies, okay, so Jefferies is the broker dealer in the deal. They'll get 3% of whatever they can push out in the open marketplace.
It's a gross number, right, which is remarkable. So that's when you sent that over to me today. Pretty cool. So they have what an interest, right? You were talking about it in terms of trying to keep that as high as they can, sell them all. They get 3% of the entire gross number.
Exactly. And so the key is going to be, they've been averaging like 200 million, 259. They did 500 million one day. Well, it's up to Jefferies to push into the public now as much equity as they can get out.
Up to 500 million shares.
Up to 500 million shares. And, they're telling the public that, guess what? This is, it's a miracle if you're going to have anything left.
It's craziness, man. Now, what I like to do, I always look at market caps of companies, right? Yes. To really look at, is there like an easy opportunity for money here that they just need liquidity or something? So you'll buy it. The market cap, even at $2.30, is only 328 million. They only have 142 million shares outstanding, and they're going to come out with 500 million shares.
Right.
I mean, there's a lot of brilliant minds in the hedge fund business that have private money available that you could buy Hertz for 328 million outright if there was that big of an opportunity in bankruptcy, right, to come out. Even it doesn't make sense, man.
Exactly. And if we talk about Trader Dave, there was an article out. So I suspect he's in a losing position this morning because the article. Did I send that to you, Tommy? I think I did.
I'm not sure. I've read a few different.
So what happened, folks, is that he started off with 3 million, and he got hit right away. He put 2 million more into the account. Now this is his quotes too. Okay, as of Friday, he put 2 million more into the account. Of course, last week, and this is what's so wild about this, folks, is that all of this was coming out prior to the downdraft on Wednesday, that all stocks only go up. Well, what ended up happening Wednesday and Thursday, he had been up like 500,000 or 600,000. That's after putting the other 2 million in and doubling down. That got sucked out, and he was about even on Friday. That's what the article's about. So I suspect this morning is down. Yeah, so pretty wild, man. I mean, it is. You know, as you're doubling down, folks, with millions, you can do that. He has more millions, and maybe he'll double down again. We'll see where this shakes out. If he, you know, if he, well, at this particular point, I think he does understand that stocks can go down.
So here's the interesting, he shared a video on Twitter 41 minutes ago. It's already got 103,000 views, right?
Yeah.
There's monetization to all of this above and beyond. Even if he loses $1 million, right? He's getting millions and millions and millions and millions of views and followers throughout this entire thing too, which you have to look at because that's part of it, for sure.
Yeah. Stay right there, folks. Tom and I come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Oh, excuse me, folks. Welcome back. We have the Dow right now down 500, Nasdaq off 77, S&P's off 40, and we'll see. Folks, 40's still not bad in the S&P's, but if that gets down like 52, 60, that would be saying that the bulls couldn't just pull it off. We have the NQs just gave up 40 points, and that's how they trade.
Yeah. Yeah, I mean, Apple's down almost $4 right now today. I was looking at Amazon was down earlier. Let me take a peek. Where are they at right now? Yeah, down a bit as well. Just the volatility, man. And then Netflix positive today. Interesting as the market really pulls back. Netflix, what we're talking about, one of those safety stocks, right? That people are flocking to as the market pulls back.
No doubt. And inside the Index 100 folks out here today, the strength of Zoom, that's up 6.5%. Electronics Arts up 3.5%. Activision's up 1.5%. Taken away from it, United. Down 8%. You got Marriott off 4.5%. Alta Salon is off 3.5%. And you get Expedia off 3.5%. You know what's going to be really weird, folks, okay, is that let's just look at United for a second. And this is going to be, we'll see, how this basically shakes out. United was $48 last week, $49. $48.87. There's no doubt they're going to be getting a lot of money. They're going to be getting a lot of loans. In fact, they're putting up their rewards program, backing a $5 billion loan. You can see how dramatically large that these frequent flyer programs have actually got.
I know, right?
Yeah.
Quite a collateral.
Right. And what that collateral is, folks, so picture what the collateral is that banks pay United as American and everyone else for the miles that when we have our credit cards, they're giving us miles. That's the collateral. And what's intriguing here is it'll be interesting to see whether the broker-dealer community can push this bond issue out. Because if you remember, 2 weeks ago, they had tried to push a bond issue out with the collateral with their planes, and the market wouldn't go for it. That was really wild. You know what I mean? And say, no, I'm not taking your plane collateral, and I don't blame them, because if all the airlines keep having trouble, planes would go down in price, right?
Sure.
Now, the frequent flyer programs, they're saying, okay, this is cash that banks will pay, meaning up for the frequent flyer program. I suspect what we'll also actually see here, which would be pretty smart by the banks, picture that you're a bank, they charge you so much for the miles, well, you try to get the miles discounted, you loan the money at the same time, and that is your backdrop, meaning the miles going forward. Now, that being said, United, even if it went bankrupt, now this has happened before, the airlines have gone bankrupt before, Americans done it 3 times, and they still didn't wipe out their frequent flyer miles. That's.
Yeah, I mean, if you're trying to reorganize, right, wiping out all your customers might not be the best course of action to try and get any business after you come back. Probably, right? I'm just literally.
That's right. Now, that being said, when I start looking at American uses this as collateral, United uses this as collateral, just picture, Tom, that if all the Tigers and Tigresses, if we were their bondholders, folks, right?
Sure.
Now, what would you do? Well, what would happen, I would say that, okay, we're going to go after that collateral, because that collateral, folks, is actually real cash. So this is going to be intriguing when they go again. I don't think the banks, the last time American went, really paid as much attention, because the last time they went was like 7 or 8 years ago. They didn't pay as much attention to those programs, because that was still money there. Do you know what I'm saying?
Yes.
That was money that doesn't look like money, but it's real money, man.
Yeah, I wonder how those contracts are written, right? And
exactly.
How that gets divvied out in the company for sure.
Slightly, man, slightly.
Yeah.
So some of the higher volume equities out here. Let's go see what we got. Yeah, American's number 1. That's down $1. You get United's down 3. Norwegian's off 153. Got the same culprits right at the very top, man.
Yeah, I mean, it's a complete reversal, as in you got Zoom up huge, you got gaming stocks up big, Netflix is up, and the airlines, travel, retail, all getting pummeled, man.
Yep, no doubt.
Yeah.
And if we do go over to Apple, bottom line is that this is hanging tight in a big way too. I mean, this is strong, man.
Yeah.
You've broken a whole nother zone at $332. You're at 335. You can see it's just backing down to that number. And
I agree. You put any of these tech stocks on a daily, I mean, let alone, right? Amazon,
really?
You're down 0.8%. But I mean, you're just like above the area that you traded in before we broke out, basically last week. Microsoft even.
Yeah.
We're just right back in this higher range. It's all of them just peaked above this trend, but we're right back up. In strong territory, man.
And we've talked forever, folks, about that. You get 3 or 4 equities that have kept the indices higher. What's going to be so intriguing here now, I'm having a hard time really saying or actually believing that some of these top stocks actually are going to basically pull back further. I think they will when we get a larger pullback, but I can totally understand technically this setup. Fundamentally, you can kind of understand that, hey, this is going to be weird, man, but there are 4 or 5 equities that, are slowly taking over the whole market. They're taking over everything that we do.
Yeah, I completely agree, man. And, if you have the time horizon to stomach the volatility that's definitely going to be happening in the next 6 months, whether it's 3 months, 6 months, year, 2 years, 3 years, 5 years, right?
Yes.
But, man, 3 to 5 years, the whole world could be a different place with the type of acceleration that we're all seeing. Zoom. So we're jumping around. We'll jump to Zoom first, just because they're up big today. One of the biggest that you put in the Nasdaq. But that run, we're making new highs today on Zoom, which the run they've had up, we're still making new highs. And then you just jump to whether it's the likes of any technology that we're jumping to. That it just seems like the time horizon that you're not going to have sellers when the world is grasping that type of a shift.
No doubt. And, one of the articles that was out here this morning, now this is a pretty intense article, folks. This is one I sent you, Tommy, about baby boomers selling into the marketplace. And
my friends and I in our group chat talking about that themselves without me even sending it to them. So making its way, that article around, yeah.
So where do you see this, folks? Okay, what this is about is that what happened in the downdraft. And the numbers out of Fidelity, if you are a bull, you better be scared, because the number of folks that are 60, 65 sold and got into cash is pretty intense. And
it's unfortunate, man.
I'm sorry?
I said it's unfortunate, right?
Yeah.
As in, it was 25, 35, like almost 1 out of 3 people, 1 out of 4 people, sold all their stocks between February and May.
Right, because what's going on is that they don't think they have another 10 years or 15 years to get that money back. Now,
right.
What you want to get your head wrapped around is that if, in fact, that selling keeps continuing for that older price, well, that's a huge amount of people that are out of the market that basically have more stock than any generation that's out there. Now, the next generation, Trader Dave and his friends, they're buying, but they're buying the wrong stocks right now. Stay right there. Tommy and I come right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow right now is down 480. Nasdaq is off 89. S&P is off 41. And bottom line, folks, if we let's go. We got a question in the YouTube channel, Tom, about has there been a separation between the gold market and the S&P? So Let's go take a look at gold. What has happened out here this morning, folks, is that gold is catching a bid. We just we hit a low of 1706. You're at 1722. And the way I'd answer that is this: is that it's always really dangerous when the S&P goes down so dramatically because they sell everything. That's what I've found on a continual basis. What has happened and does continue to happen even when you see this, meaning the downdraft, is that the metal has been holding up a lot better, as has the actual gold and silver equities. And what tends to happen is that, let's say if the S&P is going down, 1%, maybe gold will go down 0.5% or 0.25%. Then as the S&P comes up maybe 1%, maybe gold goes up 2%. That's the phenomena I think you're going to see. I'm not basically saying that there's a full disconnection yet. And the reason being is that last week, if you take a look at some of these equities, you're going to see that, they basically pulled back when that market was pulling back. Now, the volume was lighter, but the bottom line is that they still, had a hard time holding price, So we'll see how this whole thing shakes out. What it does look like to me is that this dollar is the one that's going to basically give gold the big number. The dollar looks like to me that's going to 88. Right now you're at 96. 94 is your next step down. But the way it's trading, 88 is probably game. If 88 is game, we're going to really get some big action inside of that metal market,
I read that in your gold report this morning. There we go.
And then, we have another question in the den about, have we seen many foreclosures in the Florida market? So in the real estate market, folks, check out what's going on. In fact, there's an article about it today that's pretty cool. And what it's about is that because of COVID right across the country, you had more houses that were not getting built, so the supply was going down, where, in fact, the demand for houses went up.
Okay.
So that is saying that the bottom line, I suspect, you not only stabilized that real estate wants to go forward, and now the question about have you seen many foreclosures? Now watch how this is going on. You have forbearance inside the Fannie Mae Freddie Mac mortgage market, and I believe that's about 1 out of every 3 to 4 houses. So you can't foreclose on those. So the foreclosures are not going to go up right now. We'll see what ends up happening in a few more months. So that also is keeping a higher number inside of that housing market, And if rates stay where they're staying, I suspect the bottom line is that, it'll stay stable because the bottom line, everyone needs a place to live, everyone needs a place to rent and all of the above. And if you go to the supermarket, in the supermarket right now, folks, the meat counters have already gone up dramatically. I mean, meat is like really expensive right now. So we'll see whether it's going to kick into the economy in general, but meat has definitely gone up. I
mean, just to touch on that, because this article, I just Googled it and I found it. It made me think. So you had the mortgage bailout shrinks for the second straight week. This is June 12th, okay? So this is Friday, this article. And the numbers were staggering in that you have 4.66 million borrowers in a government or private sector forbearance, okay? Yeah. That alone, talking about, and this is talking about coronavirus mortgage bailout, that's representing 9% of all active mortgages, okay? Yeah. The numbers are down by 77,000 from last week and by 112,000. But this is almost 4.7 million homes, and that's program is supposed to last a year, and time is going to fly. And what happens?
Huh? Wow.
Yeah.
Okay.
Yeah. And so this is where I said, these programs, and here's the key, right? These programs allow borrowers to delay their monthly payments for as much as a year. Now, this is going to be different probably from before. There's a number of programs, right? Maybe this is just coronavirus because it's only 9% of all mortgages. But these programs delay their monthly payments for as much as a year. Things might not be back in the full swing of a year, man. What happens at a year? I mean, they just went down by 77,000 for a week, okay? But come time to roost, there's millions of people that are unfortunately in this program, representing almost 1 out of 11, 1 out of 10 mortgages in the entire country. That number has to come down pretty quick to be anywhere reasonable in a year. So that's a big number, man, to keep in mind.
The Fed's going to be busy for a while, man.
Yeah, it's a scary number to see what happens when there's millions of homes that you didn't have to pay for a year, but then it's time, and what happens? Yeah, anyway.
Let's go to Jose in Lakeland. Hey, what's going on, brother?
Interesting. Morning, comrades. Tom, let's get the money changers back in the temple and crank this thing up for another week.
I don't know. We'll see. I mean, as we were just talking, the S&Ps just went up another 10 points. I mean, they're down 26. So, I mean, the Bulls are still there trying to get it up, man.
I got you. Hey, I'm reading here, Donald Trump prefers Lay's potato chips over Wise potato chips. Man, this guy's got to go. Hey, Tom, is Delta Airlines for a trade? Can they short Delta Airlines here, or are they gone down too far? We'll take a look at DAL.
No, it's gone down too far. You get a short position of 4.75. If you're going to do something like that, what I would do, if it ever makes it back up to like the 37, you're at 29, then, like right now, this is just coming back to its breakout area. It has lighter volume. So that's saying that the new range out here, Jose, is actually, the low out there like 26 or something and the high of 37. The closer you get to 37, the better off you'd be, man.
Okay, so I went long some options on Delta. I want to prove to someone you can make money in options other than technology.
Good. Yeah.
So it's a good setup.
It's option expiration week, too, so the volatility is going to be out here, man. I mean, there's no doubt, and we'll see whether they can get it pumped up, man. I mean, I suspect what's going to happen is that if they get to pump out, United's looking for $5 billion. If they get the $5 billion, that's going to help the airlines in general, because it's saying that, okay, they can go to the market, they can get billions without. The one they're trying to pump out right now, folks, is this. Is that it's not a government program. They're trying to pump it out to the public so that they don't get under more restrictions, because once they go back to the government again, there's so many restrictions on going forward, that buying their stock and all of this. So what they're trying to do is get that done without the government in the middle of it, so that they don't have the restrictions. And what that's all about, this is what's so sick about that, that's all about, folks, really is how the executive committees can basically divvy up equities going forward, which is amazing, but, it is what it is.
Yeah, that's the headline I've been waiting for a few days. Okay, onward and upward, fellas.
Have a great one, man. Have a safe one. This S&P, man, that was a pretty good jump that this baby just did, man.
Yeah. They're fighting in both ways, man. 5 to 10 to 15. I mean, the jump out of the gate on the open for sure, and you know, it's so early in the day, man. We'll see, but we're right back. I mean, that high we just had is right up where we were at 10 o'clock an hour ago too. 29.98 on mine, 29.99. So, and I know you're looking at 3,004 on the M contract. Yeah.
Ride 'em, cowboy. Dow down 400, NASDAQ off 57, S&P's off 30. Tommy and I come right back.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as,
Whatever you think about, you bring about. Whatever you focus on grows.
you see, I believe that everything in life happens for us, not to us, and Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
Bam!
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's down 324, NASDAQ's off 32, S&Ps are off 22, and the S&Ps right now, folks, they're going to have a shot. We're 4 minutes into this 10-minute bar, and they need 21,000 contracts. I believe 21,000, and right now they have 9. So we'll see whether they can get flat. They're going to basically try to close that gap at 3,035. And, if they don't win at this particular one, folks, it's going to be a tough one. But bottom line, they definitely have a shot at it, man.
Hey, anytime you're 80 points off the intraday, and not intraday, I guess, because it was overnight, right? But sure. 80 points off the lows, man, you better believe you better watch out for that shot they have, man.
It's a big number. And let's just go to the VIX quickly, because I heard you last night. Last night it was up at 44, huh? Look at that.
44. We can't forget that one.
Yeah, isn't that cool? Now we're down to 39.17. That being said, this thing, This thing, when we went up, man, it's going to take quite a bit to get this thing into lower price. Right now you're still up $3. Now, certainly you're down 7 or 8 from the highs of last night.
So here's what to think about that I try and think about, at least, is that I try and think about what happens if there's some changes to the projections of how bad things can be from some of the companies that are closed, even when they're opening back up. If these spikes start happening and they don't see the type of rebound that they're expecting over 6 months or 9 months, that's really where I see. We were just down 100 points in the S&P. That's part of the probability that you should be factoring in as those things start to happen, because they might not. Hopefully they don't.
There's no doubt. It's just like the bars that are right outside me, folks. Okay, the bottom line picture. You're in business. You're out of business. You've saved some money. You can open it back up again. Guess what? If that's to close again, are you kidding me, man?
Those poor St. Pete bars, man. I mean, you see that article, not let alone safety, man. Just business. It's a tough deal right now.
Stay right there, folks. I think a swim coming up next. Man, Mr. Basil Chapman, Steve Rhodes, Dave White. I'll be back this afternoon. Thanks, pal.
Thanks, man.
Look at him, folks.